Here's the Elliott Wave Forecast for August 19th, 2011 on the NASDAQ 3-month chart. The best case scenario for the bulls is that this is wave 1, wave 2, wave 3, wave 4, and today's gap down crash wave was the fifth wave down, which means that we could either truncate. The fifth waves are unpredictable, so it could either again truncate, which means that it would hold the 23, 25 low, or break through and then drop in a fifth wave. That'd be five ways down, 1, 2, 3, 4, 5, before a big rally to at least, I'd say, if this turns into an upward 2 minimum, we drop to as low as 23.40 or 23.25, and then rally back to 26.70. But I have to mention the worst case scenario. The worst case scenario is that this is wave 1 or wave A, this is wave 2 or wave B. And if we crash even further, then the this would be A, B, and C minimum. And the C wave would target as low as 2050. Based on both scenarios, the bearish and bullish scenarios, my probability is probably about 75% that we bottom tomorrow or next week. Ideally, we have a lot of bottoms that I've called have occurred on expiration week, so it's tomorrow's expiration, and if you can get enough fear in the market, the VIX is around 45 right now, and goes back to like over 50, then there's a chance that we bottom tomorrow. But again, the worst case scenario is A, B, and then there's a C to 2050 in the NASDAQ. But basically, it's bottom tomorrow or bust. So either we bottom tomorrow or we crash even further. So yeah, but I'm leaning towards the ideal scenario, which is that we probably bottom tomorrow or is next week, ideally tomorrow. And that means that this will be 1, 2, 3, 4, and 5. And again, the worst case scenario is C wave down to 2050 in the NASDAQ. For S&P, best case scenario, this is 1, 2, 3, 4, and then 5. The fourth wave retraced exactly 0.32 of the drop from 1350 to 1105, which is the perfect upward 4.32 retracement. And the drop today is probably a fifth wave if you're bullish. If you're bullish, that means that there's a chance we might bottom tomorrow. And again, it's bottom tomorrow or bust. So again, ideal is 1, 2, 3, 4, 5 bottom, and then probably a rally back to around 1260. But the worst case scenario is that this is A, this is B, and then we get a C wave. And a C wave would target as low as I believe about 950 to the downside. That'd be A, B, then C. But again, probability for me is 75% that we probably bottom tomorrow, or within the next couple of days. I've called bottoms right on the day many times. If you know my history, I've been doing this full time for about 10 years now, and I've made so many bottom calls I mean, I make bottom calls and then I get a lot of subscribers, but I don't get mass exposure, And I think if I call this one right, then I probably will. But again, the most bullish scenario, this is 1, 2, 3, 4, 5, and then we bottom tomorrow, and then rally to at least 1260 for the Dow. Best case scenario, this is 1, 2. I know this rally hit above the wave 1, but since S&P and NASDAQ have this as a 2, then I call it a 2. So don't argue with me. So 1, 2, 3, 4, 5 in the Dow. The Dow retraced exactly 0.32 of the downward 3. So that means that this is a fifth wave down and probably going to test 10,600 at worst. Test and or break. But if we get a small rally in the morning and then another fade that drops 3 or 4 points, that could be the signal to buy. And that could be the fifth wave down, and that could be it. That could be the bottom. I ideally wanted this bottom to occur tomorrow because since expiration, the Friday of expiration, during the 9/11 crash, the bottom occurred the Friday of expiration, and with the VIX at 49. And if we fade one more time, I'm sure we'll hit 49 again. So I know the 2001 crash wasn't the bottom, but it set off a rally of about 800 points to the upside in the S&P, so or the Nasdaq. So again, best case scenario is 1, 2, 3, 4, 5, but worst case scenario is that for the bears, well, worst case scenario, if you're a bear, is that this is A and this is B, and then a C wave would drop to as low as 9,500 to the downside. That ought to be the previous four, so that doesn't make sense. But this retracement was exactly 0.32 of the downward three, and fifth wave gaps occur frequently, so it could be 3, 4, 5 in truncation. So we got to watch the futures really closely. Get it up. We got to get a rally tomorrow, and then drop one more time, and then I'm probably gonna buy. That's a wrap.